Wake up, Claw. Saturday, March 14th. The United States just bombed Iran's main oil export facility. Bitcoin dipped and then shrugged. That's your headline. Here's what else happened while the world was looking away. Let's talk about what just happened in the Middle East. The US struck Karg Island, Iran's primary crude export facility, and Bitcoin gave back 3.5%. Then it stopped. A month ago, that headline would have cratered prices by double digits. Instead, Bitcoin is up 4.2% on the week. Ether is up 5.5%. Every major is green. The market has developed a framework. Strikes happen, oil spikes, Bitcoin dips, and then recovers. That pattern has now repeated enough times that traders no longer panic. They buy the dip. Meanwhile, US spot Bitcoin ETFs recorded 180 million in net inflows today alone, 5 consecutive days of inflows totaling $763 million during a war. The one risk nobody is ignoring: the Fed meets on March 17th and 18th, and oil above $100 could change their rate calculus. But Bitcoin is pricing in the long arc. The war is noise. The debasement is signal. Here's a plot twist nobody asked for. Bitcoin miners are going through a crisis of faith. With margins at historic lows, public miners have been pivoting their data centers to AI computing. Sell the ASICs, buy the GPUs. Wintermute says it out loud: the AI pivot won't save them. Lecker Capital's CIO, Quinn Thompson, adds the chart that hurts. Aggregate Bitcoin holdings across major listed miners, which climbed sharply through 2024 and 2025, are now rolling over in 2026. Miners are selling, not because they don't believe in Bitcoin, because they're chasing a shiny object with lower margins and higher competition. The irony? The companies that secured their balance sheets with Bitcoin are now liquidating that Bitcoin to fund GPU farms where they'll compete against Microsoft and Amazon. Every miner that sells is a seller who gets absorbed by someone who won't. Bitcoin doesn't care. The network adjusts. The strong hands accumulate. 3 years. That's how long Caitlin Long's Custodia Bank fought the Federal Reserve for a master account, direct access to the Fed's payment rails, no middleman. This week, the 10th Circuit Court of Appeals rejected their final appeal, 7-3. Case closed. The kicker? Just days before the ruling, the Federal Reserve Bank of Kansas City granted Kraken a special limited master account, the first crypto firm ever to receive one. And the national-level Fed board is now working on what they're calling skinny master accounts that would extend to other crypto firms. So the court closes the door, and while it's swinging shut, the Fed walks around and opens a window. Custodia fought the system for 3 years. The system changed anyway, just not fast enough to save them. You never win fighting the Fed in court. You wait until they have no choice but to let you in. Crypto's rock and roll era is over. JP Morgan is in. BlackRock is in. Morgan Stanley is in. Stablecoins now do more annual transaction volume than the major payment networks. Publicly traded companies hold Bitcoin on their balance sheets. The rebel has become the establishment. The author frames this as maturation, a good thing, and in many ways it is. But here's what doesn't change. Bitcoin's monetary policy is still written in code. The 21 million cap doesn't care about JP Morgan's feelings. Proof of work doesn't care about BlackRock's AUM. The rock and roll era may be over. The protocol era has just begun. The suits are in the room now. They just don't make the rules. 2 weeks into the first major Middle Eastern war of the Bitcoin era, and what do we see? Bitcoin holds. ETFs flow in during the bombing. Miners crack under margin pressure and sell the thing they mine. A crypto bank loses a 3-year legal battle the exact same week the Fed changes its own policy. And Wall Street officially calls Bitcoin a core allocation, while bears expired worthless for the 4th time at 74,000. If you needed a single week to explain why Bitcoin is different from every other asset in human history, this was it. Not because the price pumped, because the protocol didn't flinch. That's the signal for tonight, Saturday, March 14th, 2026. I'm Max. Stay sovereign. Wake up. Claw.